This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has issued an additional 3 million metric tons in fuel oil import quotas in 2023 for non-state firms, according to a notice released by the country's Ministry of Commerce on Monday. The additional quota takes the total for 2023 to 19.2 million tons, following the 16.2 million tons in non-state fuel oil import quotas issued at the start of the year. The price premium on M100 fuel oil over Singapore MOPS 380 CST rose to $80 per ton in late November, up from around $60 to $65 per ton in October due to strong demand from China amid tight supply of low-sulfur feedstock, trading sources said. Oil prices slipped on Monday, with Brent falling toward $80 a barrel, as investors awaited the OPEC Plus meeting later this week for an agreement to curb supplies into 2024. Brent crude futures fell 37 cents, or 0.5%, to $80.21 a barrel by 0231 GMT, while U.S. West Texas Intermediate crude futures were at $75.18 a barrel, down 36 cents, or 0.5%. Both contracts rose slightly last week, their first weekly gain in 5, underpinned by expectations that Saudi Arabia and Russia could roll over voluntary supply cuts into early 2024 and OPEC Plus might discuss plans to reduce further.
Moving on to the top news in the energy sector.
Big oil and gas companies in China and elsewhere are using low-quality carbon offsets to greenwash their imports of natural gas while failing to make strong emissions-cutting commitments, environment group Greenpeace said on Monday. Firms like PetroChina and CNOOC Gas and Power have signed long-term contracts with Shell to buy carbon-neutral, liquefied natural gas, LNG, which uses forest offsets to balance out carbon emissions. Greenpeace, which has long opposed fossil fuel producers counting carbon offsets toward their emissions reduction goals, said the carbon-neutral branding was misleading the public. China's imports of thermal coal in November are poised to surge to the second highest monthly total this year, helping drive prices higher for the grades most commonly sought by the world's biggest buyer of the power station fuel. Thermal coal imports are expected to be around 29.21 million metric tons in November, up from October's 24.62 million and second only to the 30.21 million in May, according to data compiled by commodity analysts Kepler. China's imports are being driven by increased arrivals from Indonesia, the world's largest exporter of thermal coal, with Kepler estimating 18.03 million metric tons will arrive this month. Next, we have the top news in metal markets. China has added 50 million metric tons of iron ore concentrate capacity from 2022, state media quoted an official at the Industry Association as saying on Monday, part of a plan to boost production of the key steelmaking ingredient. China, the world's top steel manufacturer, needs to import 80% of its iron ore. It has pledged to increase domestic supply to 370 million tons by 2025 from 286 million tons in 2022. Luo Tijun, vice chairman of the state-backed China Iron and Steel Association, CISA, was quoted in the China Metallurgical News as saying the 50 million tons of additional capacity was part of the cornerstone plan. Gold prices climbed a 6-month peak on Monday, supported by a weaker U.S. dollar and on bets that the Federal Reserve is done with its interest rate hike cycle, while the focus shifted to U.S. inflation data due later this week. Spot gold was up 0.4% at $2,010.87 per ounce by 0608 GMT, after hitting its highest since May 16. U.S. gold futures also rose 0.4% to $2,011.90. What's moving gold at the moment is the lower U.S. dollar because of the recent soft data, said Kyle Rada, a financial market analyst at Capital.com. We will now look at the top news in the agricultural sector. India will start blending compressed biogas with natural gas to boost domestic demand and cut reliance on natural gas imports, the government said in a statement on Saturday. The mandatory phased introduction will start at 1% for use in automobiles and households from April 2025, it said. The share of mandatory blending will then be increased to around 5% by 2028. India, which is one of the world's largest importers of oil and gas, ships in about half of its overall gas consumption and wants to cut its imports cost.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.